Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. And today we want to talk about filing deadlines and penalties. All right. And so the reason that we're doing this, because I really don't think that people really understand about penalties that the IRS imposes. So let's talk about it. So as of this recording, today is October 15th, 2019. It is the extension deadline for people that filed extensions back in April. October 15th is generally the filing deadline. So I get the question, what happens if I miss the deadline? All right. So let's start with planning. Let us start with that. So there are some people who are habitual late filers, and this takes a decision to break, to really hold your own feet to the fire to file your taxes on time. Because the earlier that you file your taxes, the better off you're going to be, especially for my business owners, because you know what? Profitable business owners pay taxes. So if you file your taxes in February, if you've kept up with your bookkeeping and all that, you should be prepared to file your taxes like February, March timeframe, right? And so if you do that and you have a tax bill, then you still have until April 15th to pay said tax bill, okay? But let's talk about these deadlines. So we know that April 15th, that comes the same time every single year, right, is the first major filing deadline, right? There are others, and I'll get to the corporate ones in just a moment. But for personal taxes, April 15th is the filing deadline, okay? And listen, guys, filing deadlines, they are deadlines. They are not suggestions. So by April 15th, you need to have filed your taxes or filed an extension in order for that to be considered timely filed. Now, if you file the extension, you get 6 months until October 15th. Now, if you're getting a refund, this really doesn't apply to you. However, if you are unsure as to whether or not you're going to get a refund, make sure to file the extension anyway, okay? You can't overextend, right? File your extension. If it's even questionable, file the extension to be on the safe side, all right? So that gives you 6 additional months. Now, if you miss then the October deadline, then we got extra stuff. All right, so the penalty for late filing is 5% per month of the unpaid tax for each month or part of the month that the tax is late. And the penalties start accruing the day after the tax filing due date. So if you do not file an extension by April 15th, or you don't file your taxes by April 15th, then you start to incur the failure to file penalty. Okay. Now, if you file an extension and then you don't file by October 15th, then you incur the failure to file penalty. Okay. So that's listen, don't miss the dates. Now, if you file your return more than 60 days after the due date or extended due date and you did not file the extension, the minimum penalty is the smaller of $135 or 100% of the unpaid tax. Okay? So that means that if you are 60 days late, like if you are due to file April 15th and you don't file an extension, or if you file an extension that's due October 15th and you don't file then and it's more than 60 days late, then you got to pay the minimum of the 100% of the tax due or $135. So, okay, that's it. Now, the failure to pay penalty is not as steep as the failure to file penalty. The failure to pay penalty is 0.5%, okay? And again, it's based on the amount of the tax due. So, 0.5% really doesn't sound like a lot, right? But remember that there is interest involved. And interest involved with the IRS is compounding and added every day. Okay? So after a while, that little 0.5% starts to get interest, and that 0.5% plus interest starts to get more interest, right? So now, if you have both the failure to file penalty and the failure to pay penalty, then you will only get charged a max of 5% per month. All right. Up to 25%. But now, depending on how much you owe, that additional 25% of what you owe, that can be a pretty big chunk of change, right? So this is why I tell you that even if you can't pay your tax bill, you still need to file, okay? Because you can work out the tax bill. But before the IRS will even deal with you on your tax bill, you've got to file the taxes. So if you would just go ahead and file the taxes, that's 5% of penalties right there that you don't have to deal with. But what happens is a lot of people say, okay, well, I can't pay, so I won't file. You're only jumping out of the frying pan into the fire when you do that. This is why I tell you, always file your taxes, even if you can't pay, because you can work out the payment part. But if you file late, meaning that you don't file an extension by April 15th or you don't file by October 15th, period. When you don't do that, you are now adding additional penalties that if you can't pay the tax bill, why would you not file and incur more penalties? Like, that doesn't make sense to me. So this is why I say I think people don't really understand what's happening with these penalties and why you need to file. So, I have a few of my clients who have said this to me, and I'm saying, okay, no, we need to get on the phone and really have a discussion, because even if you can't pay your tax bill, why add more money? Like, why add more money to a bill that you already can't pay? Makes no sense. So you need to go ahead and file timely. And this is why I say this goes back to planning. If you take responsibility to say and really hold your feet to the fire to say, hey, we're going to get this together. We're going to file by April 15th. Okay? Because at least at that point, it's done. It's done on time. If you file earlier, if you're prepared to file in February, even if you can't pay the bill, at least you have until April 15th to put some money towards this tax debt, to work out a payment plan or whatever before the penalties and interest kick in. Right? Because your penalties and interest are based on the amount that you owe. So whatever you can put towards that tax debt is going to reduce the amount that you owe and reduce your overall penalties and interest. Okay? So now let's talk about the corporate stuff. Okay, so a regular C Corp that is on a calendar year, those are due on April 15th, just like everybody else. Okay, now S Corps and partnerships, those are due in March. Okay, and if you file an extension, those are due, and the extension deadline is in September. Now listen, when it comes down to S Corps and partnerships, if you fail to file on time, for S Corps, it's $200 per month per partner, and for partnerships, it's $210 per month per partner. And I do believe the S Corp is a max of 12 months, so the max penalty is $2,400. I'm not sure about partnerships. I got to check that out. But still, $210 per month per partner. Okay, again, these deadlines are not suggestions. Okay, they are deadlines for a reason. So if you have an S Corp or a partnerships, your tax returns are due in March, and if you file an extension, and they're due in September. And if you file an extension for your S Corp or partnership, 9 times out of 10, you're going to need to file an extension for your personal return, because you need the K-1 or the distribution from your S Corp and your partnership to add to your personal return. So mess around here and get penalties for your S Corp and your partnership, and get penalties for your personal return as well. The IRS does not look at that and say, oh, we're charging penalties for this partnership, so we're not going to charge penalties for this personal return. No, that is not how the IRS gets down. You're going to get these penalties, and you're going to get these other penalties over here too. This is why you need to file on time. Or if you file an extension, to still file on time. And you have 6 additional months. That does not mean you have to take 6 additional months. There's all these other months in between. And what happens is you say, a lot of people will say, oh, I filed this extension, I can just take a break now. That is the wrong mindset to have. Just because you file an extension doesn't mean you get to rest on your laurels for the next 6 months. That means you need to go ahead and get it done, because everybody else is also procrastinating for those 6 months. And then what happens is everybody descends on that tax professional. And when the tax professional starts saying, okay, no, I can't help you this year because it's too late, then clients want to get upset. But the fact is that you've had enough time to file your taxes. And it's not our fault then that if you don't file on time or you have to go somewhere else, because we also have other clients. So I'm telling you to start planning these things, plan them in your schedule. Just like you plan your social media, you plan your content marketing, you plan your video topics, you got your marketing plan, you need to have a tax plan, because also what that does is it costs you more. When you're filing late, you give yourself no time to adjust your plan for the next year to be able to reduce your tax bill. By October, it's too late. 9 times out of 10, it's too late to put in a tax plan that's going to help you in that tax year. This is why you file early, so you can figure out the damage, and then you can go back to your tax professional, in June after the dust settles and say, hey, I don't like this bill. How can I fix this? Then you have time for planning to implement a plan that's going to help you reduce your tax bill. Tax reduction does not happen with the tax filing. It happens throughout the entire year. And if you don't do the work within that year, don't look at us like we supposed to be Harry Potter and poof, make the tax bill go away. That's not how this works. So yes, you can reduce your tax bill. It's just not going to be on tax day. It is throughout the year. So I encourage you, if you're sitting here constantly filing these extensions and not filing your taxes on time, you need to look at your own plan. You need to look at your plan and say, okay, in January, we're going to put this stuff together so that we can file once you get all your other types of documents and whatnot. Your businesses, you got to get your 1099s out and all of that. Totally get it. But waiting until the last minute to file and then want magic to happen, we slept through that class. We didn't go to Hogwarts, none of that stuff. I'm just saying. Okay. So yeah, when it comes down to missing deadlines, when it comes down to your tax filing, it only costs you more money. And yes, the IRS is going to impose those fines and penalties. Now, can you possibly get those fines and penalties abated? It is possible. Okay. It is possible. But if you are habitually late, don't think that's going to happen. Okay, so that is it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.